following day. Later, the BTRC sent another letter to GP mentioning its actions are not acceptable. It blamed GP for non-cooperation. On June the 12th, 2019, the BTRC submitted this full agreement to the MNOs. As a response letter to 17th of July to June 2019, GP requested a halt to BTRC's intervention and to allow, as in the guideline, the bilateral negotiations to continue. In lieu of a non-functioning tower regime, GP has requested via a letter to the BTRC on May the 27th to allow to be allowed to build new towers on its own. On the 24th of June, GP received a reply rejecting our application and put a hard stop on rolling out any new sites. With this in mind, we're going to move over to the quarterly financial report. I'd like to make a comment here. We encourage the company to be open and transparent and to take accountability for issues. In this particular report, you will see that we have adjusted certain figures, including some for the previous year, in accordance with a review that we made internally. And Mustafa will have more to say about that, and we'll try to answer your questions about that a little later on. Thank you. Mustafa.
2019, but before I do that, I'm going to briefly talk about the slide that you have in front of you. Grameenphone has a very strong governance procedure and risk management procedures within the organization. When we identify risks, we assess the risks and we review the processes and controls that we have in place to mitigate those risks. During this process, during the quarter, we have identified that we have made some errors with regards to sales, marketing and commission payments, current year and previous years, and as a consequence there is some impact on associated costs, some of which are non-deductible. So in accordance with accounting standards IAS 8, we have made certain disclosures in our financial statements. So as Michael referred to you earlier, our statutory financials for the first half of this year are already available online. And if you look at note 3.2, you will see more elaborate disclosure regarding the restatement. But broadly speaking, what we have identified results in a restatement of 3.73 billion BDT to our retained earnings balance as of the 1st of January 2018. And for the year 2018, we have seen an impact in profit of 1.8 billion, which has also been restated in the closing balance of 2018. We also have scheduled a separate analyst call tomorrow from 6 till 7 p.m. And our head of investor relations, Noreen, you can reach out to her if you want to participate to understand more about the restatement. So moving on into the actual performance for the quarter. As Michael said, we've had a strong organic financial performance with continued growth momentum in the top line, along with healthy profitability, double-digit growth in subscription and traffic revenue, continued with a 13.4% year-on-year growth in subscription and traffic revenue. Overall, we've seen a strong EBITDA of 61.4%, where we've seen a margin improvement of 1.7 percentage points. This is on a reported basis. We have seen EPS grow to, on a restated basis, 7.07 per share, and normalizing for the one-offs, the earnings per share has increased by 25.1% year-on-year. I should also just point out that all of our financial figures that are disclosed to you today are based on IAS 17. Of course, from the beginning of this year, we have implemented IFRS 16, and there is a reconciliation of the two sets of data in our financial statements available online. Moving on into subscription and traffic revenue, as I've just mentioned, we have seen a 13.4% year-on-year growth, and this was also resulting in a top-line revenue growth of 10.6%. The DSTR growth was partly offset by a fall in interconnection revenue by 20.7%. This was, of course, an impact from the implementation of floor pricing last year in August. We have Also, if you look at our normalized revenue, the actual year-on-year subscription growth would have otherwise been 14.2%. But Michael has already mentioned that the finance bill, which was announced on the 13th of June, actually required mobile operators to implement the change in supplementary duty from 5% to 10% instantaneously. Of course, given the variety and the huge portfolio of products and services we have, we're not able to implement the change immediately. Michael has already mentioned the change in data products has taken place on the 20th of June, and on the voice products took place on the 25th of June. So, however, in the interim, we were still liable to ensure that we were collecting and paying 10% supplementary duty to the government, and therefore that was subsidized by Grameenphone to the extent of 109 million BDT. Had this not occurred, our total revenue growth, our DSTR growth for the quarter would have been 14.2%, which was the same as last quarter. Growth in subscription and traffic revenue was driven predominantly by voice, the 4 billion growth of which 3.2 billion was contributed by voice, i.e. 80%, and 1.1 billion came from data performance. The voice revenue continued to be primary growth, contribution in the revenue, and that was driven by a 14.8% growth in voice revenue, driven by an 8.9% increase in the subscriber base. The increase in voice ARPU was 5%, i.e. 111 versus 105 year-on-year. If I now dive into the data revenue slide, overall the 18.1% growth in data revenue was driven predominantly by a 15.2% increase in data users. We've seen an increase in data users of 5.2 million net addition from last year. And the number at the end of the second quarter stood at 38.9 million in terms of total data users, of which we have seen 4G users at the end of the quarter was 8.4 million. In particular, though, for the month of June, we have seen year-on-year data growth of 21.1%. And this was mainly driven by the accelerated 4G network expansion and also supported by, as Michael referred to, the ICC Cricket World Cup, where we saw specifically a 12.5% month-on-month increase in usage. The year-on-year ARPU for data has increased by 2.4%, and this is as a result of a 55.9% growth in the overall usage year-on-year, where we have grown from 986 to 1,538 megabytes per user. This was partially offset by a 34.3% drop in the average price per megabyte, and this is obviously as a result of competitive offers in the market. Moving on to service ARPU, we have seen a 1.7% service ARPU drop and a 2.4% data ARPU growth from the same quarter last year. The year-on-year 1.7 increase in service ARPU was mainly driven by higher contribution from voice and data, and partly offset by lower contribution from interconnection. We've seen continued positive contribution from voice in combination of a 26.8%